Why do we believe that now is a once-in-a-century investment opportunity? A couple of reasons. Innovation solves problems, and we have a lot more problems now. We have corporations now experiencing margin pressure, and we have individuals, consumers, perhaps worrying about their jobs. And when we get into a period like this, and consumers are willing to change the way they do things, and they embrace innovative solutions to their problems.
Hi there, welcome back to our channel Investing Sense. Cathie Wood, CEO of the popular investment firm Ark Invest and renowned American investor, is one of the most closely tracked market watchers. She is one of the most influential investors as she focuses on emerging and disruptive technologies. She came into spotlight since her bold prediction about Tesla in 2020. Her fund made headlines in 2020 when it recorded explosive gains from pandemic lows due to a low interest rate environment. However, 2021 has been much less favorable for her flagship ETF, which peaked at 300% before dropping over by 60%. Despite the challenges Wood has faced, her unwavering faith in disruptive technologies such as blockchain, genomics, robotics, and autonomous technology remains firm. In a recent year-end Q&A, she firmly predicted that these technologies are poised to outperform benchmark stocks within a 5 to 8 year period, potentially even multiplying their market cap by billions over the next half-decade. We now take you to Cathie Wood's video as she reveals her insight of the current economic situation and gives her predictions for Ark Invest and her highest conviction names. Please tap that like button. Subscribe to stay updated on more content just like this one. Your feedback counts too, so please leave your comments below in the comments section. Thanks and enjoy the video.
The first question, our market outlook for 2023, inflation, interest rates, corporate earnings, and how innovation should fare in that environment. Okay, we know that we're getting a lot of deflationary signals, but the Fed isn't really buying into that yet. We think the bond market, though, will start to convince the Fed. So the bond market is telegraphing either much lower than inflation, lower than expected inflation, or recession, or both. And we've seen the 10-year Treasury bond yield drop from 4.25 to 3. It got down to 3.45. It's around 3.6 right now. So that doesn't leave very much room. If you assume that the long bond is a proxy for how fast nominal GDP will grow, it doesn't leave enough room for much growth and inflation. And we also know that the market always leads the Fed. And I think the bond market is speaking very loudly. Jeff Gundlach, very interestingly, double lines, famous bond investor, very successful. He has made the point, okay, it does look like inflation's coming down. Why is it going to stop at 2%? And we would agree with that. We're seeing a lot of deflation in the pipeline. Commodity prices at retail during the holiday season to clean the shelves of massive inventories. So we think that's going to show through in terms of inflation. And very importantly, housing has taken it on the chin this year. Usually the Fed is very sensitive to that. Autos as well. They really went nowhere, and now used car pricing is down 14% on a year-over-year basis. So inflation will come down, and innovation actually is going to be part of that equation. The truly disruptive innovation platforms around which we have centered our research, so gene sequencing, robotics, energy storage, artificial intelligence, and especially artificial intelligence, as well as blockchain technology. All of them are deflationary in nature. Good deflation, it should cause a boom in the products and services associated with innovation. But deflation, another source of deflation. Our confidence there is building. We've been right on the inventory build, the commodity price decline. And I think normally the market would have responded already. The market is waiting for the Fed. And we think the Fed's rhetoric will change first, and then its actions will change. And we think that's all going to take place in 2023.
Despite her investment fund's performance in the bear market, Cathie Wood has bought up shares of Tesla and other high-conviction stocks at a much bargain price. Cathie also believes on the deflationary pressures in the economy and the potential for a recession. She also mentions that the inflation has peaked and the Federal Reserve may pivot from increasing rates further, and that is a good sign for innovation stocks. She goes on to say that 2023 is a once-in-a-century opportunity, as there are a lot more problems than during 2020 sickness, and innovation will solve those problems. Due to the daunting challenges and margin pressures, businesses have been forced to rethink their approach, embracing innovation like never before. Let's get back to the video to hear Cathie on her outlook on 2023.
Another question. Investors seem hesitant to invest now for long-term growth given supply chain disruptions and the economic downturn caused by rising interest rates. Why do we believe that now is a once-in-a-century investment opportunity? A couple of reasons. Innovation solves problems, and we have a lot more problems now. We have corporations now experiencing margin pressure, and we have individuals, consumers, perhaps worrying about their jobs. And when we get into a period like this, and consumers are willing to change the way they do things, and they embrace innovative solutions to their problems. Now, this once in a century is not an understatement. We have not seen more innovation platforms evolve at the same time ever. The closest is about 100 years ago: telephone, electricity, and automobile. Interestingly, back then, we were just getting over a pandemic, the Spanish flu, and over a war, World War I. And at the same time, we were experiencing incredible innovation. And so very similar dynamics. And what happened? Inflation peaked in June of 1920 at 24%. And within 1 year, it was minus 15%. We think we're going to experience a mini version of that during the next year. It is darkest before the dawn, and the best time to invest, according to Warren Buffett and the great investors of our time and of all time, is when there is blood in the street. It's a crude saying, but it means when markets are deeply into bear territory. You should have that there's a cycle of fear and greed, and both are healthy. The fear should occur at the top of cycles, taking profits, and the greed part of that dynamic should occur at the bottom of cycles. And surely after maybe an 80% reduction on average in our various strategies, we are closer to the bottom, certainly, than to the top, as we were in 2021. Then we said, spare some powder. Now we would say, continue to average in with that powder.
Do you think about Cathie Wood's prediction on disruptive innovation technologies? Please let us know your thoughts in the comments section below, and please subscribe and tap the like button and turn on the notifications for more content like this. Thanks for watching.